Welcome back to our Brighter Minds YouTube channel. If you are new to our channel, please click the subscribe button and also hit the bell icon so that you get the notification as soon as we will discuss the new topics. So today's video is about understanding the intricacies of the merger of HDFC and HDFC Bank Limited. So we will see how it looks numerically right now and how will it look after the merger. So to know that into the detail, let's go to the screen now. So here is the details of HDFC Bank merger, a financial behemoth in making. So this is the apt title for this merger because after the merger, the merged entity is itself a financial behemoth having all sort of products in its basket. So here in the first slide, about HDFC, let's know something about HDFC. As we all know, it's India's largest mortgage player and having 45 years of deep domain expertise and obviously best in class of operations. Everybody know about HDFC group. They have the best operational efficiency, as we all know. So next, go to the next slide. So here a brief description about HDFC Limited's holding. So यहाँ पे हम we will see that obviously the data is of December. So here HDFC holds 21% stake in HDFC Bank and 47.82% in HDFC Life, 52.62% in HDFC Mutual Fund and roughly 50% in HDFC Ergo, and obviously in HDFC Credila, HDFC Capital and HDFC Sales. So this is the brief structure of the HDFC group, which holds in various group entities. So basically it's a holding company. It holds various assets in itself and through its exposure to India's largest leaders in their own spheres. As we all know, HDFC Bank is the leader in banking sphere, and HDFC Life is private insurer which is leader in private space, and HDFC Mutual Fund, obviously its AUM has been size of the AUM is very large. So now let's go to the merger scheme. As we all know that HDFC merger with the HDFC Bank will be done in two stages. Stage 1, in that stage HDFC Investment Limited, HDFC Holding Limited, both are wholly owned subsidiary of HDFC Limited, will be merged with HDFC Limited first, and then the merged entity will again merge into HDFC Bank Limited. So what will the shareholder get? Obviously with this merger with HDFC Bank, they will get 42 shares of HDFC for each 25 shares held in HDFC Limited. So what is the current shareholding of HDFC Bank pre-merger? HDFC Limited holds 90.2, HDFC Investment holds 6.7%, HDFC Holding 0.1%, roughly 0.01% roughly. So its total add up to 25.8%. And now what is the public shareholding in HDFC Bank pre-merger? So basically 37.5% is FII holding into that stock, and 15% is held by mutual funds, and in 3% roughly held by insurance companies, and QIB holds 5%, retail investor holds roughly 10%, HNI investors hold 1.5%. So cumulatively all holds 74.2% stake, and there is some shares which are underlying in depository receipt, as we all know. So post merger this shareholding will change, and HDFC Limited shareholding in HDFC Bank will be extinguished, and that means that HDFC Bank will be 100% owned by public, and the existing shareholder of HDFC Limited will get 41% of HDFC Bank shareholding post merger. So obviously the management had indicated the timeline that it will take roughly 15 to 18 months for this closure of the transaction. So as we all know that various agencies are involved into the regulatory part of the merger. So as we all know, many approvals need to come from RBI, IRDA, DI, CCI, SEBI, and stock exchanges. Shareholders approval, creditors approval. So basically, it will take more time because both are merging and both require some regulatory ratios to be maintained. So this is the picture of the timeline given by the management, that in how it progresses and what is the trajectory of that progress as per their guidance. So we all see here that it will take roughly 18 months, uh, and then now go to the next slide. We'll see that how the bank's book will look after the merger. So currently we all know that HDFC have roughly 12 lakh crore of advances, and HDFC Limited has 5 lakh crore of advances. Obviously both will be added up, and the merged entity loan book total advances will be around 18 lakh crore. So this is the loan mix, current loan mix of HDFC Bank. We will see here that it holds roughly 11% of mortgage. So basically the merger is to fulfill the gap. I mean, being a bank, mortgage book is slightly lower as compared to its peer. So they wanted to become a big player into that space, because so they added up the HDFC into their fold, and that's why the merger. So here we will see that its focus is on commercial and rural banking, mostly on retails and corporate also, apart from this commercial and rural banking. So and before merger, we will see that HDFC Limited has roughly 80% of home loan portfolio. So here individually it has 77%, and on corporates it has 5% through uh, various types of loan types. So uh, after the merger, we will see that the combined book will look like this. The mortgage part will be 33%, commercial and rural banking will be 24%, corporate book will be 19%, retail book will be 21%, and we will see the total structure of the uh, loan book in this slide also. So now we move to the next slide. So here are the numbers in tabular form. So we all saw that total advances of HDFC Bank was around roughly 13 lakh crore, and HDFC Limited was 5 lakh crore. So here is the NIM of HDFC Bank 4.10%, and HDFC Limited has NIM of 3.60%. So basically it's margin dilutive for HDFC Bank, because it's merging with a lower margin uh, entity. So and we all see that the capital adequacy ratio of HDFC Bank is 19.50%, and HDFC Limited is 22.40%. And gross NPA wise, we all know that HDFC has been of top quality in asset quality terms, and uh, in few quarters back we saw some hiccups on that in HDFC Financials, its subsidiary, sorry, HDB Financials in its subsidiary. So but that has also improved in last few quarters. So here is the total picture of HDFC Bank. 1.26% is the gross NPA, and HDFC Limited has 2.32% of gross NPA as per last reported numbers. So ROA wise, we will see that HDFC Bank is generating 1.9% of ROA, uh, and HDFC Limited has 2.30%. So, and in terms of branches, the scale, we all know that HDFC is has a wider branch networks. So, scale wise, obviously it's bigger, and we all know that HDFC distributes HDFC Limited's home loans. So basically, they are using the infrastructure for distribution. So here 6342 branches are in HDFC Limited, and 651 branches is in HDFC Limited. So combined entity will be around 7,000 branches they will have, and obviously some branch rationalization will take place. Some rationalization will also will be there to generate the synergy, and obviously we will move to the next slide. And here we see that post merger impact on the financials. Total equity shareholding pre merger for HDFC Bank is 554 and 181 crore 181 million shares in 544 crore shares in HDFC Bank and 181 crore shares in HDFC. It will go to 742 crores. So obviously the delta is 34%. Annualized PAT will be around 50,000 crore, and earning per share is obviously we will not all know that it will be dilutive for HDFC Bank, obviously accretive for HDFC Limited, as 21% of shares will be cancelled, and the combined net worth will be around 3,30,000 crore, and obviously the book value will be 446 rupees per share. And we saw that combined entity advances will be around 18 lakh. So obviously the car is HDFC car is 19.5 and HDFC Limited car is 22.4. So combined entity car will be around 19.8%. So here we all see in the next slide that what is the current weight of HDFC Bank and HDFC Limited into the Nifty 50. So here we see that 8.43% is the weight of HDFC Bank in Nifty 50, and HDFC Limited is 5.7%. So basically, why this slide? This slide is to present the fact that what will be the implications of the merged entity on the holdings of the mutual funds and on the combined weightage in the Nifty 50. So basically the merger implication is that the merged entity weightage in Nifty 50 will be around 14.1%. That means that as we all know, as per SEBI regulation, maximum exposure to a single stock taken by a mutual fund cannot exceed 10%. So obviously there will be some adjustments from their side, and since the merger period is quite large, the window is large because 14 to 18 months has been set from the management side. So that will be adjusted during that period. They will rebalance it to adhere to the norms. And obviously as we all know that merged entity inclusion in MSCI index and FTSE index is also less likely, as the legroom for foreign investment will be around 10%. As we all know that the required threshold is 15% for MSCI and 20% for FTSE. All these means that new fresh demand from index rebalancing is lower, and there will be some supply from a mutual fund side. So in toto, it means that there will be underperformance in for HDFC Bank Limited, particularly, as we all know that it has been margin dilutive for HDFC Bank, and they need to maintain the liquidity ratios, and hence they will need some larger liquid funds, liquid type of assets on their book. So this is the complete analysis numerically for HDFC Bank merger. So that's all from our side. Thank you and good day.